Hey guys, hope you're all well. Another recording today, and we are Wednesday, the 6th of May, 2020, where I am, and I truly hope that you're all doing well in this lockdown quarantine period. Still have a little bit of quarantine fatigue myself, but at least I know that on the 1st of June, we're supposed to be opening up again. A little bit of a later recording today because I had to run a few errands, but here I am. Might be a little bit of a shorter podcast, but that's all right. So here we are with EGIL.TRADE on the Let's Talk Crypto podcast, proudly sponsored by cryptofish.com, an easy platform to buy or exchange Bitcoin. Guys, what I have up here on my screen is my channel, the Let's Talk Crypto podcast. And as you know, over the last 10 or 12 days, I've started a daily recording with video that I analyze Bitcoin, whether it be fundamental news or technical analysis in terms of the charts. And I'm interviewing Bitcoin traders or traders. It doesn't have to be a Bitcoin trader. And yesterday, I just want to have a big shout out to Eric Crown. Thank you so much for mentioning us on your channel. We interviewed a community member by the name of Pumpkin Party 000, otherwise known as Eric L. And we went through his journey from learning to trade to becoming a professional trader, where now he's actually a professional trader. Guys, I'll drop the link into that video into the description below. It's a great video, very humble guy, straightforward. What a pleasure to listen to, and he just wants to share like the journey that he's been through. It's absolutely amazing, and I think that it's of value if you've got any interest in Bitcoin, or if you are a trader that's starting out, or a trader that perhaps has been trading for a while that just wants to hear somebody else's journey and relate to it. So I highly recommend that. Otherwise, other things I have on the channel is I've got the daily Bitcoin analysis, trading and news, and I also do have the Crypto Market Wizard series, where I've had obviously Eric Crown, I've had Ugly Old Goat, I've had Jackie from Nuru Trading, and we'll be adding more next. We've had Socrates, who wrote the Hyperwave book, and I'll be having him back on next week too. Anyway, moving on. We are proudly sponsored by CryptoFish, which is a online platform to buy, exchange, store, earn, or send Bitcoin. Right now, it's got internationally debit card, credit card, ACH, SEPA, UK bank transfers. We will be adding US bank transfers soon, as well as Australian bank transfers, as well as Netherlands bank transfers, and a whole host of other type of payment methods very soon, and a very bespoke premium service for our high net worth individuals. Absolutely for free. We've got a learning section, crypto, Bitcoin, blockchain, and a 101, and we've got a Cryptopedia section, which is basically a glossary for terms used in the space. And we also have a absolutely free video learning portal. It's got nothing to do with trading, although I'm thinking about maybe we might add some trading lessons in there. For now, it's all to do with Bitcoin, Ethereum, and the other cryptocurrencies in the space. And of course, we've got our crypto podcast. All right. What do we have here? 4.11% up on the day, guys. 9,228 on this heat map for Bitcoin. 1.85% for Ethereum, nearly 1% for XRP, and yeah, mostly a sea of green. So an update for everybody. Yeah, obviously we're all in a much better mood when we wake up in the morning and we rush over to our phone and everything's in a sea of green. Bitcoin dominance up to 66.78. Will it go higher? Check your charts. Fundamental event about to happen. 5 days, 5 hours, 23 minutes and 49 seconds away is the Bitcoin halving. As I've said previously, that's when the emission of the Bitcoins every 10 minutes drops down from 12.5 to 6.25 Bitcoins. What does that mean? It just means that the inflation rate of Bitcoin will be dropping. It's a great site, bitcoinhalf.com. You can follow what's happening. It'll tell you everything that's happening. What is the halving? Why is it done? Predictable money supply. And you can go through all the information they get there. I'm not going to read it all out to you, but there's some useful stats here. Simple things like, what will the Bitcoin inflation rate drop to? Well, right now, the current Bitcoin inflation rate, for those who don't know, is 3.64%, and it'll be dropping down to 1.8%. That is very close to the inflation rate of gold. And yes, gold does have an inflation rate. There is new supply that is obviously let onto the market yearly, which creates inflation. And I think, if I'm not mistaken, gold is somewhere between 1.5 and 1.6%. So for the first time, Bitcoin is going to be extremely close to the same inflation rate as gold. So let's see how that plays out. But I, for one, am macro or long-term bullish. Crypto Fear and Greed Index. We have ticked up a little bit, guys. We've moved from last month being an extreme fear situation at 15, 44, 40, and we're sitting at 42. We're basically in the medium region of this index. And how this index is useful is when it gets extreme reads. If it's extremely low, then we can tend to expect a counter move in price, and when we're extremely high, we can tend to expect a counter move in price to the downside. And what you'll see here from this chart is it doesn't really spend much time in the extreme reads. However, this last time it spent a very long time on the extreme read to the downside, which tends to lean more towards the bullish side. And it kind of makes me think, since we're still sitting in the bottom 50% of this range, that perhaps we still have another up move to go. Although we've only got 5 days leading into the halving, and I tend to feel that after the halving we might have a bit of a sell-off. However, that's just my opinion, and remember, guys, this is purely entertainment or educational purposes. Do not take a trade or do not do any investments based on anything that you see on this video, and for that matter, nobody on YouTube. Moving on. Institutional FOMO on rise as CME Bitcoin options volume set record nominal highs. As you do know, or perhaps some of you don't, the CMEs actually launched their CME options within the last few months. And although this headline does seem super bullish, let's just remember, these guys are trying to sell views. They're trying to sell advertising. Look at the top of the screen here. Look on the side of the screen here. Advertising, they need to get eyeballs on this page. And they have to do something sensational at the top. Same as mainstream media. Catch eyeballs. And although they're saying it is record all-time highs, 9.4 million on options is really, really insignificant. I must just stress this. In my opinion, it's insignificant. I've seen bigger trades. I've seen people take bigger trades single-handedly than that. So I think what the honest headline should have been, relatively speaking, compared to all the other days, we've set an all-time high, but it's still insignificant, and there's literally not that much interest in Bitcoin options on the CME. But anyway, that's what they've painted it as. And if you look at this chart, there we go. There's their interest in their options, and quite frankly, I just think it's either paid for advertising or just very poor journalism. All right, guys, moving on. Let's jump into the charts if I can find that window. There it is there. Okay, so as usual, I've got my monthly chart up. I like to start with the higher time frames, and as you can see, I've got all my year opens plotted out. Year open 2020, year open 2018, year open 2020, year open 2019, and if I zoom out, 2019 and 2017. What's the relevancy of this? Well, I do find that we seem to tag our year opens. It has been a trend that I've seen in the past that I find that keeps repeating. It doesn't mean that it will always keep doing the same thing, but these are definitely levels of interest where markets changed, where either buyers lost the battle to sellers or sellers lost the battle to buyers, where high volume has been put in and there has been a lot of participation in the market. Now, we have tagged the 2018 open, we've tagged the 2019 open, we've tagged and broken through the 2020 open. There is a chance we could tag the 2020 open before going up. I'm not leaning that way now, but I'd be 100% comfortable with the buy off the 2020 open if we got there over the coming months. Right now, looking at the structure of these candles on a monthly basis, I am not predicting that, and I don't think that's going to happen. However, if we stay in this range over here, or if we break up a little bit of swing pattern failure and come back down and test on a monthly basis, test the year open of 2020, I'd be fine with that, and I think it would be a great buy. Where is that sitting at? 71.60 right now. It's actually just mental gymnastics, actually even talking about those levels, because we've got so much support below us and we've got so much resistance above us, and we're nowhere near there. It's irrelevant. However, while I'm looking at the monthly chart, there's something else to look at. We have tagged the 2019 open, we've never tagged the 2017 open. I'm not saying we're going to go there, but I like to just say it's a level that hasn't been tagged. Right, let's move down, guys. Trying to keep this short and sweet. I have marked out my upper resistance levels here, and as I've mentioned in previous videos, why do I like this? Because I can see high volume done around these areas, and also we've tested as support, and for me this is good enough. We've broken through, come back, tested as support, tested as resistance, failed, tested this area as support, broken through the resistance, got through all-time high for 2019, right? Not all-time high, 2019 high, come down, aggressively come down, and then use this as support. Gone up over $2,000, come back down and tested this as support again. Bounced off it again, nearly $1,000, if not 1,000, 10, 9, yeah, over 1,000, 1,500, right? Broken through, tested again as support, failed, broken down, gone back up. Bit of a swing pattern failure here, guys, a bit of a bull trap. A lot of people were looking for a closure on a weekly basis up here to start the basis of an uptrend, and based on this, perhaps a lot of people were waiting down in this sort of nether region over here for a higher low. So we had a higher high based on this swing high here on a weekly basis, and around here, especially around the monthly 21, weekly 21, excuse me, and the 55, and looking at this previous area of resistance here, perhaps a lot of people here, which is why this candle broke down, would have been seen as a higher low on a weekly basis, and it completely obliterated that. So an absolutely brilliant bull trap here. If you want to know the bull trappers, there it is on a very high time frame, not very high, but a high time frame, and especially with the closure with this candle here above that previous swing high, plus above all this resistance, which was already established, clearly established, to see that go down. So here we are again. We've broken all the way back up to this resistance. Again, with this candle here wicking off it, confirming that this is an area that is being defended by the bears, by sellers, shorters, and there we have it. And then again at the bottom side, here we see that after hitting that resistance that we've just measured out there, we came back down and we were supported at this area. So buyers or institutional order flow stepped into the market share and marched it right up. And what a powerful candle that was. And to be followed up with a candle that's nearly double the volume in the same direction or trend, just confirms it. This area is a strong area of support. Strong area of interest, I prefer to use that term, or participation. It's basically going to get some institutional order flow that basically marks out a level and marks up from there, basically leaving retail buyers or amateurs behind. Boom, there it goes. Doesn't give you a chance to get out. Equally, we've hit an all-time high there. We've come down, we've broken through this, which became support, but we came back after all this visit above this resistance, which became support over here. We still came back, and it still held us up and pumped us up again, with this wick coming right down here. A little bit of a bear trap down there. Swing pattern failure on the bottom side there. We basically, we ramped up over $2,000 here. Very similar to this situation here, maybe not as much, but $2,000, showing that, again, alongside with this, confidence with that, we've got this area of support. Broke through it and tested it multiple times, and this is on a weekly time frame, which means that if we had to break down, if we had to drill down into a lower time frame, you would have seen multiple attempts, shaking people out, accumulation right there, and then ultimately smashing through and breaking through up there, which I've already described. On this time around, we've broken straight through and we've hit this level of resistance. If we can close a weekly candle above this area over here, which I have marked out as roughly 9,300 to 9,500 odd, just eyeballing it from here on a weekly basis, then I think that even this very important swing high here, 10,500, let's just say 10,100, 10,500, I do think that we might just break through and actually challenge a much more macro area, which is around about the 11,500 area, which you'll see even back in 2018 was a huge area of interest. Okay. And I'll mark it out there. If we don't break above this, if we don't on a closing basis break above this, even on a daily, I think I would be okay with that. If we can close anywhere sort of above 9,350, 9,3, call it 9,3. If we can close the daily above 9,3, I think that we're gonna challenge this up here. And although we might have a short-term pullback back and test this as support, I think ultimately we would end up challenging the 2019 highs. And there is a bit of a narrative going on at the moment on crypto Twitter and in a lot of places saying that before we had a mini pump around about the 2016 halving, which took us back up to secondary highs, which is about $700 or $800, and this would be a secondary high after the initial failure down here. And well, that, in my opinion, on a weekly basis, our secondary highs are between 11 obviously and the wick high of 13,000, 14,000. So I do anticipate that if we did break through this, we would be challenging this region up here. Purely opinion, not trading advice, educational, informative, that's about it. However, if we don't break through this, I am anticipating, at least this is the way I'll be trading it, I'll be looking for buyers, as I've said in the previous video, between the sort of even higher than this, I would say between the sort of 81 to 79 area, and leaning more towards the 78, 79 area as I've drawn this box down here. That would be my bias, but certainly since the weekly 21 is sitting around, it's sitting around 79, I could probably move this box up a little bit and probably put 79 as my median target of that range. Right now, if we move down to the 2-day, what I just want to point out is that we are about to get a golden cross. I would say we're one tick away, and that closure is still about 30 odd hours away, I think, from now. And anything can happen between now and then. Perhaps we do pull back into it. I'm not leaning that way anymore. I was leaning that way before, but the way this thing is leaking up, even if I had to put this on an inverse chart, you would, that is if you look at a chart like that, that to me is not bullish at all. So I'm not leaning towards us breaking down towards that anymore. And we do have the 200 SMA as support, this white line coming up here. But anyway, a breakdown towards anywhere in this region down here would be a buy to me at this stage. At this stage, I'm looking especially at the 2-day time frame. We are in an uptrend. I know we haven't broken the swing high yet, but we are in an uptrend, at least on the medium term here. Daily, what I can say is CMF still positive. We are still living above the exponential on the RSI. I like it. We are in the bullish control zone, and even if we came back down to test the exponential on the next tick, I think that we might make another push up. 12-hour, we have got the golden cross. We are getting divergence. We have broken a level. We have broken above where I've got roughly the 9,250 odd area marked out here. We are at a critical monthly resistance. We have on this exchange actually closed a 12-hour above, but only by a few dollars, that monthly resistance, and that's just not enough for me to just completely get my bullhorns on. But looking at the CMF here, extremely positive whilst we were going sideways. So I am leaning a little bit more bullish on that, plus the cheat code 12-hour Stokes have turned up again. I know there's been a bit of wrangling up and down here, but for now, as they're pointing up, I'm leaning a little bit more bullish, although a little bit pullback wouldn't perturb me. We are hinting at losing the exponential on the RSI, but I don't see anything to be worried about here. We're still in the bullish control zone. Nothing really to panic about. And lastly, I'll go to the 4-hour. I don't normally go to the 4-hour. I don't normally look at the 4-hour on these videos, but one thing I would like to say is we are on a higher high over here in terms of this swing high over here. I do like that, and as long as we hold above, I would even go down as low as the 90-50 area. I think that we've still got more upside to go, and maybe we'll just have a reset on the oscillators if that does occur. Guys, short and sweet today. I hope you enjoyed the video, and please, if you've got time, go and watch the video from yesterday with Eric L. It was awesome to see somebody who was working a normal day job and actually made a purposeful decision to become a trader, and he did it. He set a goal and he went through the courses, did everything that he needed to do, learned, failed, learned some more, and has now succeeded, and he's a full-time professional trader earning his income from trading. I hope you enjoyed this. We've only got a few days left to halving. Have a great night.